What are the best high-income ETFs with absolutely no NAV erosion? It is difficult to get into this group as we've seen a ton of new ETFs issued over the last couple of months, some with varying degrees of NAV erosion. If you don't know what NAV erosion is, we are going to touch on that very, very shortly. But these income-producing ETFs all pay out monthly and have a consistent track record of not losing your initial investment, which I absolutely love. Now, if you guys know me, yes, I like some risky things like Roundhill and YieldMax ETFs, but I also like having my money very secured with my long-term retirement ideas in mind. So today we are going to cover the top performing monthly paying, no NAV erosion income ETFs. If you guys are interested in ETFs, in income, in the stock market in general, you are in the right place. So don't forget to like the video and to subscribe so you never miss future free updates and find out exactly what income ETFs are making investors the most money. Let's roll that intro. So here's a post from a Redditor talking about IWMY. This is a weekly paying 0 DTE ETF by Defiance, which Defiance has an interesting, history. I like some of their ETFs. I think some of them get a bad rap when they're really solid, but IWMY is not one of my favorites. But the Redditor is talking about NAV versus income. And the overall return for IWMY from late 2023 to late 2024, held for a little over 1 year, was good. Overall, it was about a 15% total return with dividends reinvested. Not reinvested, still about a 12.4%, which is still very, very solid. The issue is your underlying NAV decay is hard to watch because you're down 40, almost 46% during that time span. And now what the point of this post was is to showcase exactly I'm still making money even with NAV decay. So that's where it really is going to depend on your style of investing. And I will say the weekly payers are much more prone to NAV decay than others. Now, there are some ETFs, Roundhill, YieldMax, some of the Defiance ones do show NAV decay. And the problem is they're paying out more through the distributions over time than they're making on the options income, on the premiums. And if you believe that some of these will continue to pay 100% indefinitely, it's hard to do. MSTY has been really, really solid over its lifespan. We've seen it pull back a little bit now, but MSTR was insanely volatile. As volatility slows down, the premiums get smaller, and you're going to see less in distributions. And if they try to keep up this 100% plus distribution rate, they're going to have to pay out from the NAV, which is going to drop the price of the underlying ETF or the ETF itself. So that's a little bit of a showcase of NAV erosion. So now we're going to talk about these funds that don't have it, which is absolutely amazing. And if you're a long-term investor like I am, but you love income, you love growing your portfolio, or you want to use your income from these positions to grow others, these are for you. So we're going to check out quite a few of them today, but I hope you guys enjoy. Starting off with one that I have mixed emotions with, JEPQ. I've held this thing for a long time. I genuinely liked it for years, but it's just been a little too slow for me now. I think there are better strategies that are making more on income and maintaining their growth of the underlying ETF. But I do want to point out, NAV erosion and just market downturn are two different things. You can see NAV erosion in the greenest market we've ever seen. But when it comes to just the overall markets tanking, you're going to see the ETFs pull back as well because they are not immune to that. So don't look at JEPQ and say, hey, it fell from $50 down to $40 in 2022 and 2023. That's NAV erosion. It's not. It is simply the underlying dropping in price. We're seeing, of course, NASDAQ dropping in price during that time, and JEPQ is going to showcase that. Now, if these didn't drop when the underlying was dropping, that'd be quite amazing, but it's not how it works. But I think JEPQ has a lot of potential still, even with it being a little bit of a lower yielder. Currently, the yield trailing 12 months is 11.51%. We're going to see a lot of similar ETFs, whether they be on the NASDAQ or the S&P 500. I don't have any on the Russell 2000 because it's not my personal favorite for these. The others have outperformed. I would say the NASDAQ being the best performer out of all of them, indice-wise, maybe with some Bitcoin actually tied in there. But there is one Bitcoin one we are going to talk about. But JEPQ is very interesting. And the layout of this video, I'm going to showcase all the ETFs, and we are going to compare all of them on drip calculators at the end to find the winning income ETF with zero NAV erosion. It's going to be very interesting, and I don't know the results yet. I'm going to do it live with you guys, unless I mess something up with the filming. But all in all, JEPQ, let me know your thoughts on it in the comments, because I know some people love it, some people don't love it. They think there are better options, which we have seen. So let's dive in. JEPQ does have more trading history than I believe the rest of these. QQQI is our next ticker. It's by Neos. I'm a big fan of Neos funds, if you guys don't know. And we can see it started trading at $50. Now it's currently $51.78. So if you were just looking at this in this time span, started trading in February of 2024, you'd say, hey, it hasn't been a great return. It's up 3%, not including the distributions, of course. But QQQI is phenomenal. It is another NASDAQ high income ETF. And I also want to mention, we are still relatively in a risky area with high income. We have not seen these trading for a decade, for more than that, like we've seen with a lot of traditional dividend stocks or growth ETFs. So we are still in kind of an interesting space. But with that new space we are in, we are seeing a lot of new things. We are seeing these income ETFs perform really well, despite the fact that they haven't been around for a long time. And that is what QQQI is. The performance has been absolutely amazing, which you will see with the drip calculator. So again, another NASDAQ fund. I do think diversification with the underlying assets is very, very important. But all in all, I'm biased with QQQI. I do hold it. I hold quite a bit of it. It's one of my larger positions in my retirement portfolio, simply because I like to drip the dividends and keep that compounding going. TSPY by Tap Alpha has been kicking some booty. Now, it is, again, very new, newer than even some of the others, August of 2024. But wow, been paying out nicely, been well protected with the market, and we are not seeing any real NAV erosion. I will say it's just down from the time it started trading, but it's down barely, not even a full percent. We do need to see more time in the market to really showcase that there is not any NAV erosion, so to speak. But I will say, comparing this to like the monthly payers where you see them pay and drop over and over again, this one's looking a lot more promising. But TSPY is also going to be, or Tap Alpha, I should say, is going to be releasing a new ETF, hopefully very, very soon, as we saw TSPY hit 50 million in AUM, which is amazing. Big congrats to Tap Alpha. And I have a full video on TSPY for those that are interested in this ETF. It has been outperforming S&P 500 ETF SPYI by Neos, which is hard to beat. Neos is kind of, in my mind, they're at the front of the income production game. But wow, very impressed with TSPY so far. Let's check out some more. If you like Bitcoin, ticker BTCI is the one for you. Bitcoin has been hitting new all-time highs, it seems like every single week. Although we did see a little bit of a lull in April, it's climbed back up once again. Now, BTCI has been amazing. So the yield is roughly 22.81%, and that's trailing 12 months, which I don't even think it's been out for a year. Looks like October 17. So no, we have not had a full year, so it's probably yielding closer to 28-ish%. Now, I am very impressed with this one, and we know that the implied volatility on cryptos, are crypto coins, I should say, it's typically higher. So we can expect to see some really good distributions from BTCI and hopefully some long-term upward momentum as we see Bitcoin climb to new all-time highs. This is the highest yielder we're going to be talking about today, which does make it a little bit riskier. But if you know Bitcoin, you know your own risk ideas of it. If you think it's higher risk, lower risk, it all depends on our individual opinions. For me, it seems to be higher risk, but when I think about it deeply, I don't think it's as high risk as a lot of other funds or underlyings. So very, very impressed with the performance of BTCI. Don't know if it's going to be our best performer, but we will find out very, very soon. And I never mentioned the full number. We're looking at 9 ETFs today. BTCI is number 4. We have some phenomenal ETFs out right now, and I'm really pumped about it. Let's jump into our next one, ticker GPIX. GPIX is not a fund I'm super familiar with. I have seen it all over X and whatnot, which I'm on X if you want to follow me on there, by the way. And I am blown away by it. So we can see 5-year chart. It is up 26.65%. Started trading in October of 2023, which is amazing. Very amazing that you have that much price return and the distributions. It is a lower yielder. I have it at about 8.4%. And again, it's an S&P 500 ETF. But growth and distributions, it's amazing. That's absolutely amazing. It has been around for a few years now. We've seen it consistently pay out quite nicely. And on top of that, you're getting some growth with the underlying. So this one is going to be hard to beat in the all-time return category, but there may be some others that can give it a run for its money. Even though some may consider this to be a lower yielder at 8.5%, you have to realize you're going to sacrifice either lower yield and more growth, or less growth and higher yield. So it all comes down to your strategy. I'm a fan of both. I have a mixed bag of income ETFs, some that have growth as a factor, some that have no growth as a factor, and I still hold them no matter what. So I am very interested in seeing what you guys think about GPIX and its first time on the channel. If you guys are fans of it, let me know in the comments, and let's check out our next income ETF. This one is very new and very interesting. We're looking at OMAH. This is OMAH. It's by Vista Shares. I've made some videos on this one before, and I'm very impressed. Now, what makes this one unique is it's on the Berkshire ETF, or I guess you'd even call it ETF. It's a stock technically, but Berkshire Hathaway. So BRKB is the underlying, and it's this target 15, meaning they're targeting a 15% yield. And what's amazing with that is it's 1.25% paid out every single month. They've been on track with that consistently. And although it is down from its original $19.91, that mostly has to do with this last couple of days in the market. It only started trading in 2025, in March. Bad time to start trading, fell all the way to almost a little under $18 and then ran back up. Now, we will need more time to see if there is true NAV decay with these ETFs, with the ones that are very new. But I wanted to bring this one up because 15% is achievable, and they are choosing, I mean, everyone loves Warren Buffett, right? If you watch this video, if you're interested in ETFs and investing, you know who Warren Buffett is and how phenomenal of a trader he is. So I think it is very interesting that they're targeting a very large audience of Warren Buffett fans with this Berkshire 15 Select. All in all, we have to give it a little more time, like I stated, but I'm watching Vista Shares very closely. They've been putting out a lot of new ETFs that have been doing really, really well. The yield so far is 6.4%, trailing 12 months. But again, they're targeting a 15%, and they are on track to reach that 15% yield in the first year, which is absolutely amazing. I love talking about SPYI. It's been around for a long time, started trading in 2022, actually on my birthday, September 2nd of 2022. And I can't even believe it, because if I had known that, I would have been hyping this one up way more. But September 2nd, it's just a good day every year in a bad month of the market. I think September is like one of the worst months of the market. Anyways, we've seen some pretty crazy returns. It's only up 3.4%. But remember, if you're focusing on income, growth of the underlying is not as important. Like, it's nice that we're up 3%, but if you're looking at this and comparing it to the S&P 500, you're going to be disappointed unless you have DRIP, unless you have the dividends actually included in the calculation. So SPYI yields about a 12.24%, a little bit under QQQI, which was a little over 14%. So a 2% difference, but it is nice to also have some diversification. That is very important to me. And while we do have a lot of S&P 500 ETFs, and this one is not the best per se, I do think it is up there. If we compare it to GPIX, another S&P 500, the one we just spoke about, it focuses less on growth and more on yield. So you're getting about a 4% difference in the distribution rate, but less growth. So what I love to do is pair these together. Put half in each if you're looking at just directly investing in an S&P 500 ETF. Put some in TSPY that seems to capitalize a lot on growth as well. There's so many factors in. I guess not even growth for TSPY. It is more yield-based, but a lot of factors in these income ETFs, and it all depends on your investment strategy. We have two more. This is number 7. So now we're going to jump into number 8, a very interesting one, and the first time I've ever spoken about it on this channel. GPIQ, another Goldman Sachs. This is the NASDAQ 100 Premium Income ETF. Long-term, it is up 27%, which is quite amazing. Started trading in 2023, late in the year. Now again, no NAV erosion. Yield is very impressive, 10.2%. That is wild. And you've capitalized on some of the returns on the NASDAQ 100, which, to be honest, the NASDAQ 100 is my favorite. If I have to pick one growth ETF, it's SPMO or QQQ. That is it. I love NASDAQ. It's tech heavy, but we are moving towards more tech forever. Genuinely, I think tech will be the biggest thing indefinitely. So very impressed by this one, and we'll be making more content on it for sure. I cannot believe I haven't spoken about this one yet. I can't believe I don't own it yet. But we have to throw it into the drip calculator and really see the total returns, which we're going to do in just a moment. But we have one honorable mention ETF that's going to be our last one, and it is number 9 of our ETFs with no NAV erosion. QUSA, a new Vista Shares ETF. It's been trading since what? March? May. So again, very, very new. We can't really tell if it's going to have NAV decay or not. We've seen it bounce around with the market. What's interesting is this is the Vista Shares. So they're selecting the underlyings. And I think it's 30 underlyings, 20, 30 that they hold for both OMAH and QUSA. And they're just targeting quality stocks. So it's their choices. So they could outperform a lot of the others that are just a bucket of all of them. But because it is a little bit less and they're selecting it specifically, could be a little bit higher in volatility, could pay out more, but have more downside risk. All depends. All depends on how the market performs and what we see. But I have been impressed by Vista shares. They came screaming into the market with OMAH getting a lot of name recognition and followed up with QUSA, which I think is a very smart move. I'm very interested in seeing long-term how this pays out. We have a lot of very amazing income ETFs, but I think they could be making a name for themselves in this space. I, again, think it's going to be a solid one, but the yield so far, 3.84%. That's trailing 12 months. It's only been paying for a couple of months. So thus it's not even close to the 15% target that they have been on track for. As well as much knowledge as I have on these, I think they are paying out that 1.25% every month and have so far. I've been tracking it a lot on X with other content creators, other people that are just enthusiasts with these income ETFs, and they've been doing very, very solidly. We're going into an interesting market. We've seen a bad drop the last couple of days. We might continue to see that. And if we do, I want to make sure that they are still targeting that 1.25% every month. And it will be very telling with a lot of these income ETFs, how they perform for the newer ones that have only been trading for a couple months. So those are all 9. Now what we're going to do is we're going to throw them into a drip calculator for the ones that have been trading for long enough and really see what the best returns are. Using dividendchannel.com's drip calculator, I'm going to just go down the line. So what this means is the winner will continue. So we're starting out with JEPQ and QQQI. Now, real quick, one thing to note, if you guys are interested in this type of content, don't forget to like and subscribe and check all my pinned links and whatnot for stuff that can get you some free stocks. We got some great bonuses going on right now with Moomoo, the brokerage, tons of stuff. So check it out. But one important factor as well is when we're looking at this, we have to remember some of these have been trading for longer than others. And so it's going to pull the data from the one that's been trading the least amount of time. So for this, we'll look at these two and we can see JEPQ and QQQI. JEPQ has been trading for longer. So it only pulled the history of JEPQ for when QQQI launched. And this is interesting. It could make a bonus for some depending on when they started trading, but all in all, it should even out. So for JEPQ, it didn't get blown out of the water like I thought. We've still seen an average annual total return of 14.53% compared to QQQI's 18.4%. Very, very impressed, but the show must go on. So now we're going to throw in QQQI up here. And down here is going to be TSPY. And this one, I'm very curious to see who continues on. Oh, it's not as close as I thought. TSPY hasn't done as well, but remember, it's on the S&P 500 versus the NASDAQ. So QQQI lives on again with that total return of 17.36% versus TSPY's 13.06% with dividends reinvested. Still very impressed with TSPY. And now we're going to move to BTCI. And this could be an upset. Let's see. Ooh, I don't know. Do I have a prediction? I think that BTCI is going to outperform. Okay, it's not even close. What? That is amazing. QQQI 12.6% in the same time span as BTCI 57.5% with drip on. That is amazing, and that shows the power of Bitcoin. Congrats to all my BTCI investors. I don't think I have any right now, but I'm going to be buying some very soon. Nothing is going to beat this. It ruins it. Maybe something will. Let's see. GPIX. No, not even close. Not even close at all. 7.5 versus 57.5. So a 50% difference. Oh boy, OMAH. OMAH has been doing some great distributions, but it's not going to come out on top. Even in the negative. Very interesting. This last drop erased all the gains for OMAH, but it's only been trading for like 5 months. So BTCI, still absolutely amazing during that time period. Should have done BTCI last, but this is live. I didn't do this already. SPYI, if it didn't outperform QQQI, it's not going to outperform BTCI. 9% in the same time frame versus, again, wow, well, 7% for the 57. Wow. GPIQ, I don't care if it doesn't outperform BTCI. This is what I'm going to be watching closely and may have to scoop some shares up. Still at 12.31%. Not close to that 57, but very interesting. The amazing thing, though, is BTCI. Could we see NAV erosion if we see Bitcoin fall in price steadily? If we see Bitcoin go back to 80K or 60K, you definitely could. We definitely could see it fall. I guess I wouldn't even say it's NAV erosion. It would literally just be dropping in price. Last but not least, we have QUSA, still very solid, up 14%. Remember that, 14%, not easy to do. And BTCI's during the same time frame, actually, it's an annualized gain of 77. So total QUSA is up 3.3 and BTCI is up 18.45. If I missed any high income ETFs, let me know in the comments. Also, let me know what is your favorite. This video really opened my eyes, so I hope you guys got some good content out of it. Don't forget, we're all in this together. We're all in this together. So if you like this video, check out these popping up on your screen right now. I really hope you guys enjoyed. And again, thank you so much for all of the support. Hope to see you in the next video.